Hey everyone, my name is Daniel and welcome back to the Finance Channel. I hope all of you are having an absolutely phenomenal day out there. As always, here today, we need to talk about HIMS and HERS stock, which just went out and announced a brand new partnership with pretty much the biggest e-commerce platform out there. The stock is up over 4% on this news. So in this video, let's go through exactly what went down, how this impacts this company, as well as some updated price targets and exactly what I'm doing with HIMS moving forward. So if you end up enjoying this video and find some value in it, please consider subscribing. And with that out of the way, let's get into it here, folks. So if you don't know, HIMS and HERS, basically, at essence, a telehealth company allowing individuals to go onto their platform, contact doctors, which are independently contracted, almost like the Uber of the telehealth space. Very interesting from that standpoint. They make all of their money by selling their own products like hair solutions, sexual wellness, and, variety of topics that also span into mental health, depression, anxiety, things like that. A great niche that has worked very, very well for them, and in my opinion, opens up a massive pathway of growth for them over the next 3 to 5 years and kind of beyond over the next few decades as these problems continue to persist and as HIMS continues to create more solutions. Keep in mind, literally like 70-80% of their revenue comes from subscription-based products, people buying these products on a subscription monthly basis, which again shows the quality of their products and what they are. So that's what HIMS is. Stock is up 4% today. Why? Well, we just got an announcement that HIMS will be partnering with Amazon, or at least opening their store on Amazon, at least in the US side. And, we do have a statement here, obviously announcing that they will be offering its products in Amazon's store to increase the accessibility of HIMS and HERS supplements, sexual health, and wellness products, and hair care offerings, including a few product bundles exclusively available through the new official HIMS and HERS store on Amazon. So again, we're going to have personal products here, sexual health and wellness, and a variety of different kind of hair shampoos, conditioners, and potentially growth treatments. Now, you do have a bit of a statement here from Andrew Dunham. He is the CEO and co-founder of HIMS and HERS. Quote, "We aim to meet digitally native consumers where they already are and create completely customer-centric health and wellness experiences for them. Having seen an increasing demand for our products on Amazon and having significantly expanded the availability of our products through new retail relationships over the last year," we'll go through those in a moment, "we are thrilled to also start selling an Amazon store. Doing so not only meets those consumer demands, but also introduces our beautifully designed, science-backed, high-quality wellness offerings to a whole new audience." When it comes to expanding into different stores, whether it be retail, wholesale, or e-commerce, you're opening up your product and your company to a completely new set of consumers. Obviously, there is a lot of overlap with something like Amazon and Walgreens and Target, but by opening up a store on Amazon, you're targeting a new audience. As you expand, you're targeting newer and more audiences, increasing your total addressable market. So when I look at this whole Amazon partnership, again, expanding, this is the actual store here. Again, I'm not located in the US, so I'm not sure if it's currently unavailable because of that, or if you're already able to buy them. But, at some point in the very near future, you're going to be able to buy these different products here, and over time, with no doubt in my mind, this will expand into much, much more. So big partnership here. We'll see what happens, the beginning of something much, much bigger. So kind of that's what went down. That's why the stock is up. And again, it really is just a testament to HIMS and HERS and their execution as a company, continuing to expand into different spaces. Now, when it comes to other partnerships like this, we obviously had Revolve, another company that is, again, involved in the fashion industry, but they did partner with HIMS to, again, introduce some of these dermatology and hair treatments, as well as Revolve for, again, the women's side of their business, a lot of dermatology products, hair products, etc. Very similar, and when you look at kind of the wholesale side of this, you have Walgreens, which, this is a massive partnership that they announced a few weeks ago, about a month or two from kind of this day here. But again, by opening, you're kind of expanding into these different markets, into these different stores, whether it be online, whether it be retail, you're opening up brand awareness, right? Someone walks into a Walgreens, they see these products potentially for the first time. That's essentially free marketing. They buy a product, they like it, they go online, buy a subscription, right? By opening up the amount of potential eyes that are on your business, you're opening up potential revenue growth and potential growth in customers moving forward over the next few years, which is what we want to see. So I look at this Amazon partnership as a big positive, and in my opinion, just as, again, management executing. Now, when it comes to my long-term price targets, and this is the next thing that I want to do, I'm more confident than ever about HIMS. And this is given the fact that they have literally been beating expectations for quite some time and continue to beat expectations moving forward. When you look at their actual earnings call transcript here, you'll see that, again, they bumped up their actual revenue guidance for the fourth quarter of 2021 to roughly $78 million from $76 million. So not huge, but obviously they're increasing revenue guidance, which is awesome. And this comes from this Walgreens partnership, which they expect to contribute roughly $2 million in wholesale revenue. Keep in mind, currently, only $2 million out of their most recent quarter came from wholesale, something like Target, while a majority came from online. So we're essentially going to have this number double quarter over quarter. That's massive when you think about it, and shows the potential that wholesale has to, again, be a lead driver of growth beside online over the coming years. So obviously this Walgreens partnership is massive and shows the execution of the HIMS management team. But what's very interesting here is that, they actually did comment on growth into 2022, and they did say they'll provide some more formal guidance in their next earnings call, which will be for year end to 2021. But they just said here that they feel good about 30% revenue growth for full year 2022. And that's fascinating because throughout 2021, they have literally beat revenue expectations every single quarter, which is incredible and says to me that if at this point they're saying 30% revenue growth is something they feel good about, they could very well achieve 35, if not 40% revenue growth if things go well, which we'll take a look at, not just in a moment, but right now. This right here is my projection for HIMS. And again, we do see a roughly $264 million expected in 2021, which is quite fascinating because analysts have actually just updated this to roughly 350 million expected in 2022. So, kind of higher revenue growth, not 30%, but actually now expecting 32.4%. So again, it really is incredible. I've had to update and improve these revenue projections so much over the past few months just because of management beating earnings, increasing revenue guidance, and analysts continuing to bump their actual expectations. So you kind of look at what's going on here. And again, if you're not familiar to this, some declining revenue, just to be a little bit conservative. This is my conservative model. We'll go through a bit of a more bullish one in a moment here. But again, they're not expected to be profitable until 2023, in my opinion, is when they'll really start to show their profitability. Keep in mind, this company has the same gross margins as Pfizer does. Pfizer has net income margins in the range of right around 25 to 30%. So again, using this conservative estimate of right around 20% by 2026. Again, this company does market a little bit more. They may spend more on research and development. So I'm going to go a little bit more conservative on this, despite them having very similar margins. And you get to a point where by 2026, using a really conservative growth rate, in my opinion, you get them doing over $800 million in revenue, paired with this net income margin, which is conservative given Pfizer, of $164 million, and, using a variety of PE ratios, which, this is a company in a growth category, the telehealth space, growing revenues by potentially over 20% over the next 10 years. So I look at this here, these multiples are really conservative. And despite these conservative assumptions, you still see a situation where this company can get to a 20% return for the next 5 years on a yearly basis, essentially right around a 2 to 3x over the next 5 years, which is phenomenal. And that's obviously at these prices. Now, let's say this company executes further, right? They said they're comfortable with 30%, could very well hit 35%, right? And then you obviously assume if they hit 35%, maybe this growth rate right here potentially does increase a little bit to a point where we maybe see numbers like this. Again, things that are pretty realistic in my opinion, and let me know in the comment section down below. But this isn't that hard to believe. Then hitting these growth numbers, again, still assuming this declining percentage because of the law of large numbers, but I'm fairly confident they could hit these numbers. But again, when I look at a stock, I want to be conservative, and we just did look at that conservative scenario, and I look at that income as well. you could see a situation where they hit a 22.5% to maybe even a 25% net income margin. Sorry about that, by 2026. And again, you really start to see the potential of this company over a 5-year time horizon. This company is executing. They continue to make new deals. And I am more confident than ever holding HIMS stock. Now, I've said this before, I personally prefer to buy this one under $8. And, reason being, when you look at it from $8, obviously the return goes up significantly in this bullish case scenario. But you do look at some of the, again, potentially more, I don't want to say bearish numbers, but again, you look at that previous growth rate that we did have at around $8, you're pretty much getting a 20% return, even in that really, really conservative case scenario. So I look at all of this in terms of what I'm doing with HIMS stock. This company continues to execute. They continue to beat my expectations. And, I've just been looking at this company for the past few months. So currently, it makes up just under 8% of my overall portfolio. And I'm happy with that, right? If it obviously goes up in a major way, I'll be fine, right? Because I have a pretty decent position built, but I would love for this one to continue kind of trading around this $8 range. And if it does go back under $8, I feel totally comfortable bumping this up to a 10 to 15% allocation in my portfolio, given the company's execution and how, despite this massive crisis in supply chain, they have continued growing and not just meeting, but beating analyst expectations on the front of revenue. They're investing a lot into marketing to grow their business, which is completely fine, which is leading to a bit of a loss. But, that's completely fine in my opinion, given the stage of growth that they're at. So anyways, let me know what your thoughts are in the comment section down below. A lot of positivity here today with HIMS. And, this may sound a little bit, I don't want to say pessimistic, but I hope the stock continues to trade around this level or potentially even goes under $8 so I can continue buying it. And, we'll see what happens in 2022, but I'm expecting big things. Anyways, thank you all so much for watching this video. I really do appreciate it, and I will see you all in the next one. Bye-bye.